It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Sentiment and what investors are seeing and their caution is really where it hits, and uncertainty. So, we're in an environment now where households, businesses, from one day to the next, they don't really know what the rules of engagement are going to be like in the global economy. And that's a really depressing factor for, like I say, intentions for hiring new staff and making investments. Equally for households, if there's uncertainty around, they're less likely to make big purchases when it comes to consumer durables and, of course, in the housing market.
And that is Sean Langcake there in Sydney on the Real Estate Breakfast. We'll get back to that conversation in just a moment as we welcome you back to the Real Estate Channel, breaking down for you the Australian property market. We do it every morning. Monday has gone. Time to focus on our Tuesday morning, July the 22nd. Yes, heading towards the end of the month now. Good morning, Justin in Dallas, Texas. Hey, thanks for your email there, Justin. Now, why is Justin sending us an email from the US, you ask? Well, a clue, it normally always relates to a relationship and the other half being from Australia. And sure enough, Justin works in the airline industry where 3 years ago he met Sarah, an Australian flight attendant. Actually, I'm not sure. Do you say flight attendant these days? It's always shifting as to what they're called. Hope I got that right, Sarah. She is working in the US as well, but is from Sydney. Now, you've both been for over a year listening to the podcast, keeping pace of various property markets. You've been out to Sydney twice and you are looking at getting married next year. You love Australia and Australians in general. I like the caveat there, in general, which is probably code for when you're not mocking me that I'm an American. You would like to, you say, buy an apartment in Sydney, hopefully close to the water. Ka-ching, ka-ching, more money there, Justin. But are willing to spread out further. You don't want to buy out of Sydney as the whole purpose is to be close to Sarah's family. She has a large extended one. You say that it's a complete 360-degree turn for you moving from the US, but you are super excited to move to Sydney. And thank you for some of your comments that you have made about the podcast as well. Great. Keep us in the loop of developments. We'll be really curious as to how that all lands. And if you too are listening to the podcast from outside of Australia, moving back home, or maybe like Justin, you met an Aussie person, suddenly your life changes and you think, hey, I could move. Tell us about it. Our email address, as always, is myrealestatepodcast@gmail.com. Right now, let's get back to Sean Langcake from Oxford Economics Australia there in Sydney. Good morning to you, Sean. Welcome back to the Real Estate Breakfast. Yes, that's an interesting one, isn't it? Moving out of Dallas, Texas, into the hot market of Sydney.
Yeah, good morning and thanks for having me. Look, I wish Justin all the best. I think sounds like from those circumstances, probably the best thing they have going for them here is that they've been earning US dollars and can bring some of that extra power over to Australia, where obviously the dollar is quite a bit weaker. I think for most, coming to Australia and especially a market like Sydney, there is a bit of a sticker price shock. Not just in the level of house prices, but also, where house prices sit relative to incomes and, just how much longer we're paying off our housing and paying off our houses and how much more deposit that we need to stump up to get in the first place. So you're exactly right. The closer you get to the water, the harder it gets, but wish them all the best.
It's a real thing when you look at the exchange rate with the American greenback, and because people can work from home, people can actually outsource their services anywhere around the world, and that is a real buffer. If you are being paid in US dollars, what a fantastic thing that is, especially if you're a first-time buyer, and the ability to just gain all of that extra money when you convert it over. In fact, there's a real argument to be had there. If you are young and you can outsource, make sure you outsource out of Australia and into the US.
At the moment and over the last couple of years, it definitely would have worked in your favour, but it's not necessarily always going to be the case. So, if you are earning in another currency, you're assuming risk, because if it swings back the other way, you can also get bitten. And if you're in this global marketplace for labour, there's probably always someone cheaper than you. It's a challenge. It certainly has worked out very well for a few people, a number of people over the last few years. But it is always worth remembering, when the exchange rate moves, there's a loser for every winner.
Yeah, I can't really recall a time when the Australian dollar was higher than the greenback, though. And I want to segue from that because you used to work for the RBA. Last week, we had all of the shenanigans from the RBA. What went through your mind when that no change, that pause mode was struck?
The thing to bear in mind here is this is an impact of the timing of when rates cuts are going to come. It's not taking rate cuts off the table. So the direction of travel is still lower for interest rates. Obviously, just not yet when it came to July. And the biggest thing this taught me is that, the Reserve Bank really doesn't have a good deal of confidence in the monthly read on inflation that we get from the ABS. They're really going to wait and see when they get the full quarterly print ahead of the next meeting, and I fully expect them to move at the August meeting with another cut.
We'll talk about the unemployment rate numbers in just a moment. In terms of next month, would you be surprised at all if the RBA went for 50 basis points?
I would. That's a bold move. The concern that you have with a move like that is, are you going to spook the horses? And what I mean there is that the market starts thinking, well, boy, what is it that the RBA knows that I don't? And seeing a need for a kind of a supersized cut. They've always kind of been in favour of moving more gradually. I think they see themselves in a situation where rates are still a little bit restrictive and they're getting closer to a neutral setting, and they're going to kind of ease their way there. That's the kind of path ahead that they've signalled to the market to date.
We are more than just a real estate podcast. We cover a multitude of subjects, including property data, current buyer-seller sentiment, and the mood of the market. Follow each week all of the main talking points and know your property.
So let's welcome in from across the ditch is Mark McGoldrich, who is an auctioneer. And good morning to you, Mark. Welcome to the Real Estate Breakfast. Tell us a funny story. I'm sure that you've got one in your kit bag.
The one I was going to tell you was I was doing auctions in Christchurch down in the South Island. The company I was doing the auction for used to, on a Thursday, great day for real estate, isn't it? They used to lease a nice big room down at a sports and library complex. One time a nice lady who was perhaps a little more senior in years had just dropped off her library books and she saw a flag in a crowd and she went in, and 7 minutes later she'd bought a house. So here she was bidding away at the auction, and then we congratulated her. Well done, you've won. And the agent saying, I don't really recognise her. Of course, you don't have to register, do you? Fortunately for her, after we sat her down and gave her a nice cup of tea and said, don't worry, the underbidder was good enough to pay the price that she paid. So she avoided that one.
And right now it is time for another property tip as we take you to Sydney. Recently we were talking to Angelo Boras from Richardson and Wrench and Potts Point, and you've got a property tip for everybody.
Yes, guys, when you go to those open homes and you see a big crowd, remember one thing. The more people that want the home, the better the home is, because one time you'll come to sell it and you want the same amount of interest then. So if there's not that much interest, there might be something that might be wrong with it. So if it's got a lot of interest, it might be the right property for you.
What you've got to be doing is thinking restaurants, Angelo. It's the same premise, isn't it? If you walk past a restaurant, nobody in it, same scenario.
Something right. Exactly. I've seen people overpay for things and then only years later I'm selling it for them and they're making money on it and some. So, good property, you can't really go too wrong.
Unlock the secrets of real estate and stay informed about the latest real estate buzz with hot market trends, emerging suburbs and hidden gems.
Now, I mentioned the unemployment rate, the numbers. You have been looking at those numbers. How impressed are you?
We've kind of been looking at the labour market for a little while now, waiting for a shoe to drop, and it's starting to come through. The story of 2024, for the most part, was, the economy growing at a very, very sluggish pace, and yet the labour market really outperforming. And really, we're starting to see a big slowdown in the labour market now, and the economic gravity that was being defied is no longer happening. We've had very, very weak jobs growth in May and June, and we're now starting to see the unemployment rate tick up just a little bit, and it's reached 4.3%. Some of this is the non-market sectors of the economy like health and education, the big hiring spree that we had there, maybe running out of steam. But equally, I fully expect at the moment in the environment of real policy uncertainty and stemming from, US trade policy, the businesses are really reluctant at the moment to make big commitments, both when it comes to hiring, but also when it comes to big investment plans.
You mentioned the trade tariffs. I mean, they are real. They cannot be ignored. I think the big, not necessarily the misstep, but there have been people saying, well, we're kind of shielded from the trade tariffs. They don't really affect us the same as it does affect various other countries around the world. But they are real at the end of the day, and the trade tariffs are voted on probably day in, day out by consumers and that public sentiment. The yo-yo effect of up and down, different countries being slapped different trade numbers. It's one that you can't really simply run away from and say it's not really going to affect us.
That kind of attitude that you're describing is half right. It's right in the sense that the US is not a major trading partner of ours, and it's not a major consumer of things that we export. So, relative to other economies in the region, we're not very, very plugged into supply chains. We're not reliant on the US economy as a place that buys a lot of what we produce, nor do we kind of import a lot from the US. And so that trading relationship is really very small. So in that sense, our export markets are not incredibly affected by what's going on here. But sentiment and what investors are seeing and their caution is really where it hits, and uncertainty. So, we're in an environment now where households, businesses, from one day to the next, they don't really know what the rules of engagement are going to be like in the global economy. And that's a really depressing factor for, like I say, intentions for hiring new staff and making investments. Equally for households, if there's uncertainty around, they're less likely to make big purchases when it comes to consumer durables and, of course, in the housing market.
It's going to be interesting for the rest of 2025. I think it was yesterday we were talking only 167, 66 days left until the end of the year. Scary stuff, we're just about into August. We'll leave it there, Sean. Enjoy your day in Sydney, and thanks again for coming back on to the Real Estate Breakfast.
Anytime. Thank you for having me.
We dive deep into topics like buying, selling, investing, and maximising your property's value, from mortgage advice to the latest property data and trending numbers. Your real estate journey starts here.
So I have to ask you, how did you wind up being in Mildura, given that you're from North Yorkshire in the UK?
It's a very long story. So essentially, I served in the British Navy in the UK for 10 years. So once I left, I decided to spread my wings, get out of there for a bit. So I booked a one-way ticket to Beijing. I thought, well, I'll start with the Great Wall, and essentially worked my way through Southeast Asia and basically settled in Sunraysia, Mildura, in 2009.
I can guarantee you, when you were standing on the Great Wall there in Beijing, the last thing that was probably on your mind was Mildura.
Absolutely. Peter still says to me today, I spoiled all your plans because I really wanted to go to Canada, do the same there, but I've yet to get to Canada. So Peter was my roadblock for that.
We connect you to the best real estate information across Australia. The Real Estate Podcast.